Good afternoon, traders. Thanks for joining today's partner webinar. As always, my name is Keith, here with Shark Indicators. We've been involved in the NinjaTrader ecosystem since 2011, 9 years, providing tools like Bloodhound and Blackbird that help traders be more productive and in control of their own trade systems. And lately, I'm realizing more and more how important that is in a time like this. We're always looking for ways to add to the trader's toolkit, and this webinar is part of that mission. Before I pass it off, as always, let's take a quick look at the risk disclosure, very important. Futures, foreign currency, and options trading contain substantial risk and is not for every trader. Ference has 10 years of experience working in banking on a large IT project for a major US company. He was an early adopter of Bloodhound and has been designing and building systems for customers since 2011, basically the year we started. Apart from running Remic, his company, he is also a visiting lecturer at the Central European University, although online only nowadays, where he teaches trading strategy design in the Masters in Finance and Masters in Business Analytics programs. All right, with that, Ference, I'm going to unmute you now, and you should be able to take over.
Wonderful to have you here, guys, especially in these extraordinary circumstances. Your attendance and interest is much appreciated, and I'll do my best to keep this short and interesting for you, and hopefully also useful, something maybe you can use in this downtime to turn to your advantage. Right off the bat, the title of this presentation is The Edge, and what you see there is basically how, I'm trying to be funny here, how edge is spelt in the trader's dictionary. Probability of win multiplied by the average win plus the probability of loss multiplied by the average loss should be and must be bigger than zero, otherwise we're going to lose our money. So Keith mentioned that Shark Indicator started in 2011. I'd like to mention as well that this year, incidentally, Remic is 10 years old. We started in 2010 with a senior partner at the time who's retired since. And I thought I might just mark the occasion and list some of the milestones on the right, and also some of the webinars. I marked those webinars in red, which I think are still kind of useful. So if you have a little time while we're in lockdown in various parts of the world, if you're so inclined, check those out again. And I think especially the one on patterns, last year, Shark Indicators, Shark Week, in my opinion, it's kind of important to understand the subject of that webinar, and also cognitive biases is something that will come up today as well. It always comes up, and it's always something that we have to guard against when we trade. All right, so why the edge, and making sure that that we do have an edge must come first. You see, people say trading is difficult. Well, I beg to differ, but actually trading is, if you think about it, it's not difficult. Going to the moon is difficult. Trading is definitely not difficult if we do things in the right order. And that's what this little cartoon is supposed to represent. So we have to do things in the right order. And it's harsh reality that if you don't have an edge, we're going to lose our money. It's mathematically guaranteed. What is the only variable is how fast we're going to use it. Okay, so how do we go about doing things in the right order? I really want to pay respect to a man who sadly passed away a few years ago, Mark Douglas. Everybody knows his name. He wrote two fantastic books, and he's mostly well known for, and rightfully so, as an expert in trading psychology. I would also want to emphasize that he's got lectures on YouTube now available where he talks about probabilistic thinking and the importance of probabilistic thinking. I found it really fascinating. I recently discovered them. So I encourage you to check those videos out. Also his books, especially The Disciplined Trader, is definitely a classic. Thank you, Mark, for all the work, and rest in peace. Now, today's topic, here we go. I'm showing you two series of numbers. The first series of numbers, is it random or non-random? If you think it's random, type in an R, and please do so. Let's see what everybody thinks. And if you think it's non-random, you can type in an N, letter N. Okay, so I'm getting a lot of R's. Somebody, Bill, says it's definitely random. That's an interesting opinion, Bill, and we're going to get to that. And you may even be proven right. We'll see soon. Of course, it's non-random. I mean, there's a pattern here, right? There's obviously a pattern going on here. How could it be random? Before we go into the details, please look at the second data series and answer the same question. Just say, do you think it's random or non-random? Just type in an R or an N, whatever you think is the right answer. Okay, remember, if you say it's random, that means there's no pattern, which means it's impossible to predict what the next number will be. That's what it comes down to. If you say it's non-random, then what you are saying, in fact, that it is possible, and actually maybe you already did, you calculated the next number after 138. Because if it's non-random, that means there's a pattern. That means we can calculate the next number and the next number and so on indefinitely. Okay, now this has a lot of relevance to trading, and I'm gonna do my best to try to show you how. This is this number series that was on first. The yellow field, we can type in any number. And when I type in the number, the data series will be generated. Although the numbers may seem random, and almost guaranteed it would be very, very difficult, to figure out what the rule is and what the next number will be. If you make this a little bigger, then this is the actual algorithm upside down. So if you really want to know what it is, you can check it out. And that's what this otherwise meaningless formula behind each number. The point that I'm trying to make here, that although the data series looks like it's random, actually there's a very strict rule behind this. And based on this rule, if we went on to the right, each and every number, the next number in the series will be definitely, easy to define. It's basically will be calculated by Excel automatically. But the point is that there is a algorithm behind this. Now, let's move on quickly, because the next series is, anybody would say, and I would agree with you right away, that obviously it's not random. I mean, it's 0101 forever. It's not random. But if I told you, and I will tell you, that I tossed a coin 1,000 times, I recorded the results in Excel, and then I looked at the results, and I just grabbed and copy and pasted this chunk onto this page, then what would you say? Is this series random or non-random? I think everybody would agree that then it would obviously be random, no matter what it looks like. You see, no matter what it looks like, it's random, because tossing coins is random. And I can have 10 ones or 10 zeros in a row. That wouldn't change the fact that tossing coins is random. So the first step was, I just aim to demonstrate to you that just looking at the data series, it's not possible to decide if a series is random or non-random. And a good-looking data series can be completely random, a result of a random process, which means the next number, it's impossible to predict what the next number will be. And a seemingly random series of nothings can be actually the result of an algorithm, maybe simple, maybe complicated, doesn't matter, but an algorithm whereby it is actually quite possible and deterministically possible, right, to calculate the next number. Okay, and that has great relevance to us in trading, and I'll hope to be able to demonstrate that to you in the next two steps. How we decide if something is random or non-random is basically influenced to a large degree by our cognitive biases and our pattern recognition instincts. Through the evolutionary times, it's always been very important, a matter of life and death to our species. But in certain situations, especially in financial markets, it works against us. So we'll have to develop the skill, and this is something that Mark Douglas talks about a lot too, that we have to develop and cultivate the skill of guarding against our cognitive biases. All right? So cognitive biases, pattern recognition instincts, and misplaced confidence are traps that are easy to fall into as we go about our trading endeavor. And I'd like to invite you to play a little game. John and Paul one Saturday decided to play a game, and they decided to toss a coin 1,000 times, exactly 1,000 times. And they had a second rule too. They wanted to know who's going to win. The second rule was not only heads and tails who will win, but they said, if it's heads, John will give Paul $1. And if it's tails, Paul will give John $1. All right. Now let's suppose for a second that we stop thinking here and we're not going to go to the next step. And if you go to this page, you can play the same game. What I'm going to do now, all right, so every time I press F5, very, very quickly, I run 1,000 tosses. It's just an Excel chart. Every time I press F5, John and Paul tosses the coin 1,000 times. Now, a couple of interesting details. So the one thing that we notice right away, that often the result of this game doesn't return to zero. Sometimes it does return towards the zero, you see? So the boys can decide, okay, this game makes no sense. It's a complete waste of time. Nobody can win here because nobody can make money in this game. But you will notice if I press this a few more times, every time the rules are the same, but the exact order of the tosses, of course, will be randomly distributed. The chance is 50-50. This is what we're going to call in trading actually accuracy. We're going to call the 50-50, we're going to call the accuracy, and the 1-to-1 will be the win-loss ratio. You see, sometimes during the game, somebody was up $50 and the other person down $50. And even at the end of the game, it was $20. Somebody made money. This is really, really interesting. Somebody's up $50. If I showed you this, and I would tell you this is an equity curve, would you like to, trade this strategy or pay money for this strategy or anything? A lot of people would say, sure, why not? Of course, it makes money. But as soon as I told you what process produced this equity curve, the whole thing makes no sense because the process itself is random. Again, whatever the result, it's useless to even try to, let's say, build a career on this. You cannot build a career on a random process, can we? Of course, in real life, the boys being smart, they would realize this whole thing makes no sense at all, and they would go and have a beer instead. Now, let's move on to a second stage. Then they're going to modify the game a little bit. So the probability tossing coins is still the same, but now they're going to change the payout. They're going to say, if it's heads, John gives Paul $1.20, and if it's tails, then Paul will give $1. Now, think about this. The probability is still 50-50, but now I'm introducing, like a second lever of a machine, I'm introducing what we will call an edge here, a slight one, but nonetheless an edge. If it's still 50-50, probabilistically, after 1,000 trades, probably one of the boys will be up a little bit. Would you agree? Because the payout of the process is not even anymore. Now, if I press F5, we're going to notice something interesting and important, that although we defined the accuracy, which is 50-50, and we defined the win-loss ratio, the payout, which is 1.2, each and every 1,000 instances of this process will be completely different. And that has relevance to us. Imagine that two traders trade the same strategy. And after 1,000 trades, they're wondering, how come I don't have those results? The many traders who want to copy somebody, and then they try, and it's just not working for some reason. Well, this is why it's mathematically quite unlikely that two runs, even with the same probabilistic metrics, will produce the same results. Now, but there's another thing that we're noticing, of course, as I keep pressing F5, is that all of these curves are deterministically, you're going to end up to the upside. This curve can simply not go down. Maybe it's going to go down a little bit, so maybe we can call these drawdowns or pullbacks, and it is quite possible that it will start with a drawdown. That's why the initial capital, for example, now I'm jumping into trading now. Imagine that you start out a trading program. Well, who says it's not possible that the first 10 trades will be losers? I mean, it's just part of the range of possibilities. That's why it is quite risky to start a trading program with a small account. But more about that later. So we can notice two things. It's sloping up, which is very good news. There is an edge baked into this equation, and basically the equity curve cannot help but go up. The other thing that we notice that each of these curves will be different, and there will be drawdowns, larger. Well, I can change this to, let's say, 110. You see, which is a slider. And then, you see, and then I'm introducing more variability. I'm giving more chance to chance itself. Let's say 1.01. That's really, really small. That means that it can be anything. The edge is so slight that I'm giving more chance to chance itself. This will be something that we're really going to pay good attention to, and that's the win-loss ratio. Now, if we make one more step, and you can guess what we're going to do now. We're going to change not just the payout, but now we can also change the probability, which means I can say, let's say 6 out of 10 trades, 60% of my trades work, or I can say only 20% of my trades work, or maybe only 45% of my trades are winners. And when I win $100, and when I lose $100, and 45% is my accuracy. Of course, if I change this to, let's say, 55, then the curve should be going up. And not surprisingly, so although the win-loss ratio is 1, there's no edge there, but it's still a good strategy because my accuracy is better than 0.5. Now, if I am able to identify, and now we're getting down to actually trading strategies and backtesting and evaluating backtesting results and such, if I'm able to come up with a trading program, a strategy that has a little edge in the win-loss ratio as well as in the accuracy, then I got something good going. Now, if you notice, I can still press F5 many times, and you will notice that each and every time the results will still be different. Let's say 0 or 7, give it a little bit, like 7 out of my 10 trades are winners. Then the more I have, of course, the flatter the equity curve becomes, and the better my trading strategy will become. Now, one more thing. Remember the turtles, the world famous Richard Dennis in the 70s or 80s, I think it was, the famous turtles in Chicago. Well, I read somewhere that their accuracy was something like 35% or less, but the payout was substantial. Now, that is characteristic of a trend-following strategy, where the accuracy is rather low, but you see their strategy, the trend-following strategy, I know the payout was substantial, maybe 4-1 or 3-1. Let's try 3. That's a very robust trading strategy. So what's the takeaway from all this? Well, first, it's mathematically impossible to make consistent profit in a random environment. You need 50-50 and 1-1. That's random. And as traders, we have to make sure that our trading results are the result of a non-random process. Remember, if it's 50-50 and 1-1, and I show you one of those equity curves that just happened to be good by chance, that wouldn't help us, would it? It's not a business. It's not something we can build a business on. So one thing we have to make sure that our trading strategy is based on a non-random process. And also, obviously, that non-random process has a positive edge. That's the only way to ensure that we can stay in the game. And that comes before everything else. That comes before meditation or psychology or even before capital, because I can have a lot of money. If I don't have a strategy, I can have a lot of money for a while and then I'm going to lose it. So the edge is the first thing that must be covered in trading. Now, I assume that everybody here is aiming or is already or aiming to be a professional trader. So that means that we have to verify our edge. We are not gamblers. Our job is to verify the edge and then deploy that edge onto the market. We need to devise a edge verification process. That means finding an edge and making sure that the edge is maintained. So it needs to be a recursive loop every week, 2 weeks, depends on the time frame probably. I mean, if you trade a weekly chart, there's no point in reviewing your results every 10 minutes, obviously. So, but if you trade a small chart intraday, then you might want to review your trades every Friday or every week. So we have to keep verifying our edges. And we do that through back testing, forward testing, and market replay. And I link these in because on each of these, it just leads to one of those. Okay, I'm not going to play them now, but I have lots of videos. If you go to our channel, the REMEC channel on YouTube, we have lots of videos about back testing, forward testing, and market replay. And I urge you to do the same thing. I cannot test every month and every instrument. It's kind of time consuming a little bit, but I must have about 50 up there. So that should give you an idea what to do and how to do, and also to indicate, just to show you the importance of having to do this on a regular basis. And market replay can be a form of forward testing if it's an out of sample data set. So for example, you devise a strategy on data between January and May. You test it on data set from June to December. That's called an out of sample data set, which means that your strategy actually has never seen that data. It's past, yes, but your strategy doesn't know it. So as far as your strategy is concerned, it's the future. And this is where we're getting to the main point here. Because then when we've done 1, 2, 3, and 4, 1, 2, 3, then we're going to write it all down, because that will become our trading plan. Strictly, the trading plan is the rules of our trading strategy. And basically in red, what I wanted to show you, your whole trading plan is basically one sentence. If XYZ, then enter trade with ABC parameters, else stand by. Now we only have to define XYZ, obviously. Those will be your trading rules. And notice that XYZ, we're going to use Bloodhound to define, and then enter a trade with ABC parameters, and those will be defined in Blackbird. So you can include an algorithm for any possible scenario once you're in the trade, and program it, and thereby be sure that it's completely consistent. I should say, though, proudly so, that the REMEC products already have this red sentence well defined. So if you want to save yourself a year or two of hard work, that's when our products can come into the picture. And the last one is something I heard from a senior trader once, and just a sentence that I'll remember forever. And he said that I owe it to myself that I only risk my first dollar on the market when I've done 1, 2, 3, and 4. And 1, 2, 3, 4, 5 is the order that I think, things should be done in the right order. Finding an edge and keeping an edge, it's a recursive process. We talked about this. Needs constant maintenance, correct? We also talked about the importance of having data proving, or at least providing strong evidence that the process is not random. This is the journey that I wanted to share with you, the journey of finding an edge. Can I show you what we did in Remac Premium today? So this is what Remac Premium looks like, just 30 seconds, a quick view. This is a protected page, so only you need to be a subscriber to see this page. And so every morning, or most mornings, I should say, there's a video just to prepare, the group, what we're facing that given day. We also have the Remac Market Scanner Pro on the page to guide us. This is actually our Houston. So strange as it may sound, first thing I do in the morning, I look at this. I look at the Market Scanner Pro that we developed, and that's where I'm going to know what to do that day. I share the setups with my subscribers. So here we go. There's a timestamp. So when this email goes out, that was the time. That's when it went out, and I can change it. It's a timestamp put on there by NinjaTrader. So there's no kidding. It was 10:33 a.m. This email went out to all the subscribers. We were actually waiting for a short entry here. This little yellowish line is our entry point, stop target. That was at 10:33. 1:47 p.m. we are filled, target, stop, same thing. So that's the situation at 1:47. And where are we now? 3:06 was the last thing, because now I'm in a webinar, so I wasn't looking. 3:06, this is where we are. We were waiting for the first target to get filled, to get hit. So this happens day in and day out, every day of the year. Look at this, every day, all the setups. And believe me, there are losing trades, and we're doing the right thing at the right time. And the losing trades are cost of doing business, and that goes on every day of the year. We also have archives, past months. This has been going on for like 20 months, I think. There was a trial, and then we went public. When was it? April 2019, we went public with this. And if I go back to the previous page, right, there should be a video library. Okay, so all the past videos are here, the morning videos. Lots of them, so sorry, it loads a little slowly, but it's all here. Again, these pages are protected, but it's within our domain. So if you subscribe, you'll get access to it, and this is something where you can see how we use our own strategies in real life. So we have 2 strong products and 1 service, which actually uses the same strategy, the same methodology, but in practice it uses the momentum strategy for trading every day. And now we also have 3 indicators, which are not strategies as defined in NinjaTrader, but indicators as defined in NinjaTrader. 2 of them have been with us for a while, and if you have momentum, you don't need to buy them, because the Remac MACD and the triple R, the second one, is part of Remac Momentum. This third one, the current day open, high, low, just came out 2 days ago. So if I may, I'd like to say something about this in 20 seconds. This is an indicator that I've wanted to have for a long, long time, and now we have it. And I'm happy to be able to share it with our customers. And this is a special purpose indicator that helps traders, intraday traders, who want to catch trending days. I'm sure you know this, on US futures markets, the NQES, about 1.4 times, I should say, on average, there's a trending day. If you look back, the last trending day on the ES was February 4th. Now, that's a little bit less than 1, but since then, we've gone through some extraordinary times. The problem, of course, how to catch those. Trending days, and you know this, are excellent opportunities for capital accumulation. Very difficult to trade. It's lots of challenges, not easy to do, but if you can do it right, those days can add up on an annual basis tremendously to your account. And as you know, a trending day starts at one extreme and ends at the other extreme. So if it goes up relentlessly. If it drops, it just drops relentlessly all day through. There's a video on this, so I explain how it is used and how it helps you, but you're free to check it out. And I'm quite proud that we have this little thing now here for intraday traders specifically. So here's the deal. The market scanner is the first one. The market scanner is herewith, I'm announcing, this has been a test run, but we have decided to keep it here. Keep it here free of charge. It will be here on our front page, on the welcome page. Check out the videos, but I can only tell you this is where I start my day. So I share it with you, check it out, learn how to use it. There's enough material about it in the documentation and among the videos, and I hope you will find it useful. That's completely free of charge. You can book an appointment with me if you'd like to discuss something, your trading plan, or if you have your stumbling block or anything that you think a conversation or a discussion might help you move forward, then by all means, please book an appointment with me, and I'd love to chat with you, and I'll try to help you any way I can. First 20 customers, special offers. I've never done this. It's been all bundles. If you've known Remek, then Remek has always worked with bundles. But this time we're going to make it different. It's 50% off any Remek product or service. Remek product or service, not the Shark Indicators products, but Remek products and the service, and thereby I mean the Remek premium service, 50% off with this special code. It allows you to actually build your own bundle. The Rock Solid products by Shark Indicators, and I'd like to help you to build your own bundle. I have a Remek product, I have a Shark Indicators product. You go to checkout, and there is this code that you'll be able to copy and paste, or just type it in, Remek paid forward 50 off, 50%, but 50 off. Here it is, and you type it in, and at checkout, the website will calculate your discount for you. You can put anything in this cart. You can put one product or 50 products, up to you. On the Remek stuff, the 50% will be calculated. And that goes on, that will be first 20 customers. I haven't had much chance to look at your questions, but I'd love to do that now. So give me 1 second and see some of the comments here. The Remek Edge system, Heinz is saying, well, you must be referring to one of either of our two systems. The Remek system, which is the Renko based, is intraday, and Remek Momentum. I can show you I have Ninja open in the background. Give me 1 second. I have all these things. So this is the Remek system. This is a Renko based system. And then, okay, let me jump onto Remek Momentum Pro. This is Remek Momentum Pro with Bloodhound and Blackbird, of course. And also this is what we use in Remek Premium every day. It comes with this here, this market analyzer, which we call Market Scanner Pro, is the same thing that we have on the first page of the website now. How do you avoid slim fitting? Do you mean overfitting? Yes, if that's what you mean, that's a good question. Well, overfitting, so when I verify the edge, one thing that I'm using is always test it on data that the strategy has never seen. Remember, out of sample testing. You never gave yourself the chance to fiddle with the settings and to try to make it look good. I never try to make it look good. All the videos that run, they run with the default settings. That's the whole point. If I started to fiddle with the settings, I could make them better. Right, so Randy, how much does the system cost? Well, okay, so with the 50% off, let me jump, okay, let's jump to the website and check it out. So I should go back. I'll show you where the store is. So shop, so this is remek.ca products. You click on shop. Let's see, let's try the products. So here are all the products. And well, for the next 20 customers, you can click on anything and type in the code. Remember the code? Type in this code right here. copy and paste, and it will give you 50% off. Okay, Randy, good question. What kind of computer? I definitely recommend an i7 in this day and age, an i7 with an SSD drive. Ninja 8 really appreciates SSD drives. The tick data are very, very small, millions of very small files. So if you have a traditional hard drive, the rotating hard drive, that it takes a lot more time to read the data from a revolving hard drive. So try to get an i7, or if you can afford it, an i9 definitely, with an SSD drive and lots of RAM, as much RAM as you can afford. Okay, commission. Yes, very, very good point, Vicente. Commission. So when you let's jump back here to the actual equation. This equation, probability of win multiplied by average win, and so on and so on, must be bigger than zero. Yes, but must be bigger than zero in such a way that your commission is covered. The edge should be strong enough to cover your commission. Otherwise, you'll be losing money. Very good question. Thank you for that. Yes, Bill, if I can talk to you, of course you can. Please, I welcome anybody who'd like to contact me. Just please send me an email. Here's my email address, and let me know how I can help you. So what other markets can I work on? Oh, well, look, and how much capital do I need? Okay, well, okay, so not everybody is in a position to sit at the computer all day and be busy as an intraday trader. So, but intraday is not the only way to trade. You must know something. So a lot of the big moves in the market are done overnight. Just look at gold. Just look at gold yesterday. So REMEC premium is about 50% intraday these days. I'm after opportunities. I don't restrict my activities based on time frame. So if there's a good trade, 6 months, long term, why would I ignore it? I might not take it, but I would certainly be interested in checking it out. I'm not ignoring short-term trades or long-term trades. Having said that, I must say that the focus of my attention is a 240-minute chart. 240-minute chart, and that's kind of midway between intraday and overnight. It's big enough to take advantage of overnight moves, but small enough to know what's going on intraday. How much money you need? The exact calculation must depend on contract size and also what instrument you trade. Look at the ES 3 months ago. The daily candles were very small, at 14 points ATR average. Now it's 100 ATR average. So volatility changes dramatically over time and also across instruments. Oh, Vicente, okay, so why the system needs Bloodhound? Right, we have two versions. We have two trading strategies. The REMEX system is a Renko-based system, and it requires Blackbird and Bloodhound because, very simple, because it was built in Bloodhound. It was built in Bloodhound. Think of it like this. I give you an Excel file. Well, you need Excel to open the file. The file was built in Excel. Same thing with this. The program, the strategy was built in Bloodhound, so you need Bloodhound to run it. Why it was built in Bloodhound? Because the development cycle in Bloodhound is so much faster and easier, and modifications and upgrades and keeping in step with the times, it's so much easier if a strategy is built in Bloodhound. I don't know of any better tools to do this in, and that goes for Blackbird as well. Blackbird, remember, is the one that manages this trade once you're in the trade. What happens after your entry? What happens before your entry? That's Bloodhound does that. REMEC Momentum is the other strategy that we have. That's not Renko based. It works on any bar, tick, volume, range, anything you want. We use it usually on time and tick bars. My premium subscribers know this in detail. And it was also built in Bloodhound and Blackbird for the same reasons. Two excellent products. It's just, I'm just being objective. 15-day trial of the premium service. Yes. Now, so if that's what you mean, then I'm happy to answer that question because it's a great question. So if you have purchased Remac Momentum, do you need the Remac Premium service?
Yeah, I saw another question come in, so I wasn't sure if you saw that. Tony Lynn asked something, but
Okay.
other than that, I don't know if you missed anything, but if anybody feels like you got skipped, put it in now, remind us, and we'll get to it. Obviously, Ferenc and us, the Shark Indicators, we're all very accessible, so if we missed you, don't be offended. Just reach out to us. We'll help you out.
Thank you, Keith. Thank you. And Tony's question. So if I have the Remac system, do you have some way of upgrading to Remac Momentum Pro? Would you mind please sending me an email, and I'm sure I'll make an offer for you which is reasonable, because you are already a customer and you're just basically buying another product from us. So definitely I can work out something for you. Please send me an email after the webinar. So here we go, the three versions of the Remac Momentum strategy. That's what Tony's asking about. And he already has the Remac system, which is the Renko-based system, and he has the Pro version. Wonderful. So yes, by all means, please send me an email. I'll be happy to work out an offer for you, probably in the form of a discount code, something like that. Thank you very much, Tony. Great presentation. I'm happy to hear that, but I do hope that there was something here that you could take away and build on.
No, it's great to see that a lot of people were asking questions, so you had a chance to remember what, if anybody had anything they were wondering. Covered it pretty well. Yeah, so if there's
Thank
nothing
you.
else that you want to discuss, basically I just wanted to say, thanks for coming in, guys. This was our first sort of vendor partner webinar that we've held since the world kind of went crazy. So thanks for coming in. I think you
Yes.
And being with us. It's interesting. Our world, our trading world is in a unique position where, although we can still be experiencing a lot of negativity in this time, a lot of us have that instinct, like looking for opportunities. And I see this as a good opportunity to sort of hone our skills, look for things like this, whether Remic is right for you or not, whatever the way the style of trading you go for, or anything else. It's about seeking ways to kind of build your skills right now while the opportunities are there. It's a time to reset and figure things out for the future. So
thank you, Keith. I completely agree. Let me just add one thing. Relatively speaking, I didn't spend too much time, but I think I wanted to make sure that I do get the point across about Shark Indicators products. And I said this a few times. These products would not be possible without Bloodhound and Blackbird. So please do spend the time to discover these products. There's lots of possibilities. So go check out their excellent YouTube channel. So there's one more question here quickly. Tariq, which system is providing better results? Well, it's hard to say. You see, that depends on many things. Time frame, market regime. If you look at the past 2 weeks, everything's been crazy. We had to rethink a lot of things in our trading. Some days we just simply skipped because there was no edge. The world has been upside down. So that depends on a lot of things. If you go back years and years, you see that the first 5-6 years, I was very heavily into Renko bars, and my fascination with Renkos and the cleanliness of it is still here. But I always want to have a product which is time independent, which means time frame independent and bar independent. And that's what REMEC Momentum is. So I'm very proud of the work that we've done with REMEC Momentum. REMEC Momentum is basically the grown-up version of the REMEC system because it's more versatile. That's how I see it. The methodology, I'm waiting for that little pause where the little window opens where we can enter, or a little door. That's where we enter. I'm a pullback guy, and that you can catch that very efficiently with both systems. I hope that helps. David is saying something. Let me just read it, David. Okay, I'm not sure what you mean. I said mixing and matching time frames, setups, and instruments. What do you mean exactly? Do you mean the fact that well, okay, let me start with the instruments. I follow about 20 instruments in my own trading. So if you go to the website, actually, this is real life. So hold on a second. Let me just jump on the website. So if you go to the website, where is it? I need my bookmarks, I guess. You know that on the first page, the market scanner. I'm going to find it soon. Here we go. Market scanner. These are the instruments that I follow. It's about 20. And no, I don't get confused by them. No. You see, there are two ways of doing this. I think if I understand your question correctly, let me know if I don't. But two ways of doing it. So there are some people who just focus on one instrument, like just trade the ES. That's it. They don't even look at anything else. That's fine. I'm not that trader. I don't look at one particular instrument. I look at one particular setup. And wherever it occurs, if I can afford it, I'm interested in looking at it. So the other one is the time frame. The intraday trades and the overnight trades, when I enter a trade, and that goes for the premium service as well, each trade has a fixed time frame. We don't change the time frame while we're in the trade. As to the backtest results, now backtesting is different, David, because if I run a backtest, I run a backtest on a given chart. So if I run a backtest on a 4-hour chart, then I want to see what the results would be. Then I will evaluate my results on that time frame, which on which I ran the backtest. Okay, questions kind of stopped now. So again, to all of you, I really appreciate, especially in these difficult times and lots of challenges in family and children and everything, wherever you are. And all the best to you. Listen to the scientists, stay safe, and I hope we are able to make something good out of this. The world has changed so many ways, and something good will come out of this. So please stay strong. There's some countries are hit much harder than others, and we can't tell you how much you're in our thoughts. So let's stick together and let's get down to work, think positive and spend a little time with whatever information you might have found useful in here. Feel free to use it. If you'd like to have more information about the product, just send me a line. My offers are valid. Let me finish with the offers again. So let me jump on this and then I'll hand it over to Keith. So here's the last page. So let's finish on this page. So 3 offers basically. The market scanner, I didn't say too much about it, but please check out the documentation. There's lots of information about the market scanner and how we use it. Then I'm happy to discuss and help any way I can if you sign up for a consultation. And 50% off for the first 20 customers. And that goes for the product and the service as well. Thank you very much, and a special thanks to Shark Indicators, who invite me pretty regularly to talk to you, so I appreciate the opportunity. I've been a big fan, and whatever the market throws at us and whatever life throws at us, we will deal with it. Thank you, and all the best to you again. Over to you, Keith.
All right, thanks, France. Yeah, I think you said it better than I ever could. Take care of yourselves. I just wanted to point out this interesting headline I just saw. Dow rebounds in the best day since 1933. So you got to look at the small little wins.
Exactly.
So, anyway, if you like what you saw here, or if Farron's piqued your interest at all, take advantage of what he's offering. We're both here to help you out in whatever way we can, because we're here to provide tools to make your life easier, hopefully to help you as the trader be more successful. So yeah, if you have any more questions, reach out to us. This video is recorded, and you should receive an email tomorrow, about a day after this ends. But you should be able to find it by tonight on our YouTube channel, youtube.com/shark indicators, in case you want to jump the gun on that. All right. If that's all, thanks, guys. You have a great night.